Hello dear students, today we will see final account simple adjustments. 10 adjustments I am going to tell you. Let me remind you, in final accounts generally information will be given to you, first trial balance, then adjustments. Trial balance amount, it will appear only one time, either in the trading account, profit and loss account or balance sheet. Anywhere it appears only one time. But adjustment amounts will appear two times. Any item which is given in the adjustment, that effect will be two times, where it will be most of the time trading or profit and loss account, and second time balance sheet. Very rarely trading, profit and loss account only that adjustment will be there, balance sheet no. So anyway, remember that adjustment means that effect will be two times. Okay, two times we have to take it. So how we have to consider these two times, that we will see. Simple adjustments I am telling you, minimum basic adjustments you must have knowledge, then we can go for the tough and rare adjustments. Okay, so today we will say simple adjustments. Let's get into the topic. The first one is here, closing stock. You know that closing stock will be always given in the adjustments only. So this effect will be two times. One will be, it's on the trading account credit side. Trading account credit side. We know that trading account, whenever we prepare, debit side opening stock, purchases, credit side sales, closing stock, you know that. So that is why trading account credit side will write. And another time it will be in the balance sheet asset side. Balance sheet will write it on the asset side. Why we are writing on the asset side? Leftover closing stock. It's an asset, so we will be showing into the balance sheet asset side. Able to remember? Closing stock, two effects, trading account credit side, balance sheet asset. Trading account credit side, balance sheet asset. That's all, remember. Now second one, outstanding expenses. Any expenses outstanding means payable. We have to pay. So any outstanding expenses, if it is given in the adjustments, that effect will be like this. One is in the P&L account or otherwise trading account also. It can be a trading also, any one. Trading or P&L account, debit side will write. Suppose already existing expenses are there. Say for example, salary is already given. Salary is already given. To that salaries will be adding outstanding expenses. In such cases, we will be adding this. Trading account or profit and loss account. Salaries means P&L account only. So P&L account, I will show you. P&L account, say already salaries are given. Salaries are given. Suppose say salaries are 2000. Now outstanding salaries are say 1000 rupees. Outstanding salaries are 1000 rupees. Means we have to add outstanding salaries 1000 rupees amount in the outer column. Like this will show. If already salaries are not given, only outstanding salaries they are saying, you can write it directly to outstanding salaries. Anyway, the effect will be P&L account debit side. If at all outstanding wages, where do you find wages? Trading account. So rather than P&L account, we will take trading account. So this would be wages. Wages, suppose say 2000 are already given. Outstanding wages 1000 rupees, that will be adding to the present wages. 2000 plus 1000, outer column 3000. So this will be the effect, first effect. Okay. Next, after that, are you getting this? Next, after that, outstanding expenses means payable expenses. Payable, it's a liability. It will be in the balance sheet liability. Payable liability. Okay. So this is about the second one. Next one, unexpired or prepaid expenses. Prepaid, paid in advance, prepaid, we have paid. So whenever we prepaid means, for example, rent prepaid. Rent this year amount we have paid, and also next year or next month amount also we are paying. Then that is, we call it as a prepaid. Prepaid always it will it will affect two times. How it will be? So it will be on the one is P&L account, deduct from the expenses. Suppose a prepaid rent they are saying. Example, rent is already given, say 500 rupees. Prepaid rent 200 they are saying. Prepaid next year's na. Why do we take next year's in the P&L account? To get the accuracy of the P&L account, to get the profit or loss of this year only. We don't want prepaid amounts. So that is why we'll be deducting this. Deduct prepaid 200, amount in the outer column 300. Like this you'll be taking. Are you getting it? Anything prepaid, or you can say unexpired. This is another word of prepaid, paid. Next year amount we have paid now, no, next month amount we have paid now only. So that should be deducted from the P&L account. Most of the prepaid expenses will be indirect expenses. Indirect expenses will P&L account. From P&L account related to that account, you have to deduct it. And another one is prepaid expenses. Whenever we are paying in advance, prepaid. So that will be in the balance sheet asset. Next year amount we are paying now only. So then that will be an asset. So second effect will be balance sheet asset. Third one, outstanding or accrued income. Outstanding income means receivable income. When some income is receivable, that effect will be in the P&L account. Incomes you will find in the P&L account only. Which side? Credit side. Receivable will add to the credit side. Credit side will add. See, for example, rent received is given on the credit side. So where can I show here? Credit side, rent received 500. Receivable rent, outstanding rent, receivable rent. Outstanding means we'll add receivable. Going to receive, it's an income. So outstanding rent, say it's 200 it is given. So we'll add and we'll show it in the outer column. So like this, P&L account, credit side, we are going to add to that income, whatever income is given. So this is outstanding, receivable, outstanding, okay. This comes in the balance sheet, receivable, tomorrow we are going to receive, then that will be an asset, balance sheet asset. So this is receivable, accrued or outstanding income, anything is receivable. P&L account, credit side will add balance sheet asset. Next one, income received in advance. If we received in advance, to know the accurate profit or loss, we have to deduct this received in advance. So one effect will be P&L account, deduct from credit side. Income will be on the credit side, right? So from that, received in advance, next year amount we have received now only. So that we don't want. To know the accuracy of the profit or loss, प्रॉफिट या लॉस ठीक से पता करने के लिए हमें नेक्स्ट ईयर का नहीं चाहिए. वॉट एवर वी आर रिसीविंग इन एडवांस, अगर एडवांस में रिसीव कर लिए तो उसको नहीं लेना चाहिए P&L अकाउंट में. दैट इज़ द रीज़न वी आर डिडक्टिंग. ओके, डिडक्ट इट फ्रॉम द P&L अकाउंट क्रेडिट साइड. And received in advance, it will be in the balance sheet liability. Remember these two, you need to remember. If paid in advance, asset, balance sheet asset. Received in advance, balance sheet liability. Paid in advance, asset. Received in advance, liability. Okay, 5 are over. Now coming to the 6th one, depreciation. Every asset value, especially fixed asset value, will be decreasing, like machinery, furniture, building. So this asset's value will be decreasing. That is, we call it as a depreciation. Any depreciation is given, so that's a loss. One time it appears in the P&L account debit side. P&L account debit side first time. And second time, where does it appears? The balance sheet. Balance sheet deduct from the asset. Suppose a depreciation on machinery is given. So that will write debit side P&L account depreciation on machinery. And second time, balance sheet deduct from the machinery. Okay. So this depreciation. Next one, interest on capital. Interest on capital. On interest any capital is there. So that effect also we have to take it twice. One time this appears in the P&L account debit side. Why debit side? Because it is expenses. We are paying on capital, we are paying interest. So that is debit side because expenses. And another time, balance sheet add to capital. Where will be the capital? Balance sheet liability side. Balance sheet liability side add to capital. One time is P&L account debit side because it's loss. Another time balance sheet add to capital because interest on capital is we are paying it. Liability is increasing, that's the reason we are adding it. Next one, interest on drawings. This treatment will be quite opposite to the interest on capital. Interest on drawings will be in the P&L account credit side. Why credit side? Someone is drawing some amount from the capital. They are going to pay interest. When they are going to pay for the company, for the firm, it is income. That is why we'll write it on the P&L account credit side. And balance sheet. Balance sheet deduct from the capital. Capital will be in the liability side. Deduct from the capital. Remember, interest on capital we are adding. Interest on drawings deduct. If at all drawings are given, that also will deduct it. You know already I taught you the basic pro forma. Okay. Interest on capital will add, drawings will deduct, interest on drawings will deduct. In the same way, the treatment will be like this. Interest on drawings, credit side of P&L account, balance sheet, deduct from the capital. Getting? Next, bad debts. Regarding with this bad debts, I'll take another session in depth. You must know very clearly without any confusion. So right now you remember bad debts. What is bad debts? It's a loss. When you are selling goods on credit basis, the person who purchased the goods, they are debtors. Sometimes debtors may not be paying the amount. If they are not going to pay the amount, if they are not going to pay back you, then that is loss. That loss we call it as a bad debts. Say I have sold goods. Say 50,000 I have sold. Out of 50,000, 10,000 goods I am not going to get. They are not going to pay. On credit basis I have sold 50,000 and 10,000 they are not going to pay. When 10,000 they are not going to pay, this is loss. That loss we call it as a bad debts. Not going to get. Loss. This is from the debtors. Debtors 50,000 when I am selling goods on credit basis, 50,000 who have purchased from me, they are debtors. They need to pay. So debtors will be showing into the balance sheet always asset side. Now here 10,000 we are not going to get loss. Loss will appear in the P&L account debit side. One time will be P&L account debit side. Another time balance sheet deduct from the debtors. Balance sheet debtors means asset side. Balance sheet asset side you will find debtors now. From debtors you are going to deduct. Say for example 50,000 I have to get amount, out of this 10,000 they are not going to pay. So debtors amount rather than 50,000 now, when 10,000 is gone it will be 40,000 only. Na? That is why you are deducting from the debtors. This is about the simple bad debts. In depth we will discuss in the coming classes. Now next one, goods distributed as free samples. Sometimes to promote our business, to get more sales, to increase the sales, we will be distributing some goods as free samples. when you are selling goods on free sample basis, this effect will be twice. One time trading account deduct from the purchases. Why deduct from the purchases? Goods. Purchases means goods. We have so and so goods. Out of that, some goods we are distributing as a sample. Means purchased goods are decreasing. That is the reason we have to deduct from the purchases. This is one effect. Second effect is, so whenever you are selling goods, or you are sending goods, you are distributing, not selling. Whenever you are distributing goods on free sample basis, we are not getting anything. So it is a loss. So that is why that loss we have to mention it in the P&L account debit side. P&L account debit side. This transaction particularly, it doesn't make any difference in the balance sheet. In balance sheet it doesn't make any difference. It will not be shown because two times we have taken. One time is trading account deducted from the purchases. Second time P&L account debit side. That's all. You can take a screenshot or note down. So today we have seen simple adjustments. In the next coming classes, I'll tell you the rare adjustments, tough adjustments. You need to concentrate. So those adjustments also we'll see. Now please go to the description box of this video or go to the playlist. Whatever syllabus you want, if you are doing CA Inter or otherwise CMA or MCOM, MBA, BCom or intermediate 11th 12th, whatever may be your course, few subjects definitely it will be in your syllabus. Please check it out and what is needed, use it. And also help your friends or siblings or someone who is struggling to learn the subject, commerce and management subject. Do share these videos with them and practice well. Have a bright future and good career. Take care. Good luck.